Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic markets. In today's video, I'm going to show you something that a lot of traders have missed in the trading industry, and these have made them to lose a lot of money. Okay, this topic is neckline loop breakout analysis in Forex synthetic indices. Okay, if this is your first time of visiting my YouTube channel, try your best to subscribe and turn on the bell notifications so that you get notified each time I upload a new content. Okay, try to like and share to your network so that YouTube will push us to a high level of audience. Okay, in today's video, this is something you need to actually beginner trader. You really need to understand the power of necklines and loops. Okay, necklines and loops are control variables. So what is neckline and what is loop? Before I read this document to the end, I'm going to go to chart and show you what a neckline or loops are. But in the meantime, a neckline is just terminal resistances and support that if broken, market will change direction, the price will reverse. Okay, while loops are the terminal plane, the terminal area in the chart. Like these are extreme areas in the chart that contains a lot of ranges, that when price break out of those ranges, they change direction. Okay, now I'm going to show you on the chart before I continue reading this document so that you flow with me. Okay, easy. Let me show you examples of neckline, okay, and loops. This is your hourly time frame. So this is a loop because this is the last range that was broken before the market changes direction. Are you seeing it? Okay. You see that this is a loop. That rectangle that I have shaded is a loop. Okay, there are major loops and there are minor loops. Our interest is on the major loops. So this is a loop in uptrend market, so it's a minor loop. Okay, and then the neckline, you have to use a horizontal line and get the neckline. This is a neckline because you see that price keep rejecting from this neckline. Are you getting it? Market came and break it. This candle break it and the retest was made. What happened? The price of gold fall. Okay, to create a new swing. So node and necklines lead to creation of new swing. Okay. Now coming here, this is also a neckline. There is a neckline here. Okay, this is a neckline. Let's delete this. There is a neckline here which I can map. The necklines are supposed to be small, like they're supposed to be connected to small loops, tiny loops, because those loops are very powerful. They are the final stuff that market have to break out of before changing direction. Market have to break out of those loops. So this one is a loop, and price do what? When price break, it rejects, break, and then it went up to create a new swing. Okay, it went up to create a new swing at this place. Okay, now see how gold managed to change price. Here we have a loop. This is a loop. Your own work is to identify loops and neckline. Okay, they happen at extreme point. They happen near the swing highs and swing low. So because they happen near the swing high and swing low, you can easily identify them by applying other advanced technical analysis, which I'm going to show you in this video. Okay, so you see that this is a loop and this is a neckline. There is most time there are final distance or separation of loop and neckline. So this is a loop. How do you draw a loop? That final regions that are very near to a neckline, that's the loop from the end to the neckline. So price break and re-enter the neckline and start going downwards, and that's how gold crash. Now gold is coming to create a new low. The next movement of gold is going to come here and test this neckline in a big way. Gold is going to go up to test the neckline in a big way. Okay, now I'm going to deploy technical analysis to show you how to locate nodes and necklines. I mean the major node and neckline, not the minor ones. The minor ones are the ones that occur during retracement, while the major ones are the ones that occur during impulse. So we really need the impulse, but if we are to create the retracement, then we need to know that the risk management have to be there. Most retracement are deep, while some are shallow. You see, so if you are lucky enough to get the deep retracement, you are going to make money as if you are trading the impulse. Okay, so here is a short retracement, while these ones are deep retracement. Okay, so how to locate deep and short is just risk management. When you are trading retracement, use lower risk. If you are risking 5% on impulse move, then risk 2% on the retracement. With this idea, even when the retracement take you out, you can actually have enough margin to continue trading in the impulse direction. Okay, but I recommend determining like the higher time frame view of the market. If you're able to know the higher time frame view of the market, you will know when a bigger retracement is coming, so that you can optimize your risk, because this is a bigger retracement. So in this case, in the risk, you can risk 5% instead of nominal 2%, but here you can risk 2%, okay, and catch the move. Why here, which is impulse, you can risk how many? You can risk 5% or 10%. Okay, now where I'm going now is how do we actually determine this node and neckline, especially the major ones. Okay, now remember in the let me go back to the document so we continue. So necklines and loops are control variables determining the potential big move in the market. They become important if they occur in a strong trending market or strong resistance/support. Okay, so you'll be looking at this. You have to first of all, confirm that the market is trending, and you are now looking for these things in near strong resistance and support, and the swing highs and lows of a trending market. Okay, which are then right here. But you should know this. When we talk about trending market, we're actually referring at the highs and lows in that trending market. Okay, so you will catch the big move in time. Okay, the H1 and M30 time frame are necessary here. So you actually identify these breakouts in the 1 hour time frame or M30 time frame, despite what the higher time frame is saying. Actually, you can identify them in the 1 hour or 30 minutes, but most time you can deploy H4 time frame so that you will get high filtered signal. So we can use H4 so that the signal will be more accurate. Okay, will be more accurate. But when H4 is breaking out, it means that the H1 and M30 time frame is accurate already. With H4 breakout of a neckline, the H1 and M30, you don't need to worry about the H1 and M30 breakout. All you need is to wait for some retracement in the M30 or H1, and then you enter that market. Okay, we only trade breakout that are performed by big boss or institutions. We only trade, there are two types of major move in the market. We have the trap move and we have the big boss move or smart money move. The trap move are all those moves that you trade and you lose. When you trade them, you lose. When you trade them, they hit your stop loss because you traded the wrong direction. Okay, so this neckline and loop analysis will help you to identify, it will not help you to identify the big balls, but it is your duty to know the direction of the big balls. If the market is trending upwards, then you know that the big balls are the buyers, and you suppose know that trend can change. So while you are riding the trend, always know that there are regions in the chart where the trend will change. Okay, so these are the things you should know. If market is trending downwards, it means that the sellers are the big boss, and you buying in that market, you are wasting your time. Okay, hence in the direction of main trend or change of trend. Okay, so hence you trade in the direction of main trend or change of trend, because trend can change. So when trend change, the season have changed, and then you follow the new trend. Okay, so right now I'm going back to charts, up down analysis. So in the monthly time frame, gold break out of this this thing is a very strong resistance. So gold break out of this resistance. It attempted to break it here. It attempted to break it here, but it fell. It rejects, and then this is the candle that break. This is the candle that break out of this resistance. Okay, so this is a support in future. Gold can come back and test this area and push higher. Okay, yes. So for let's say more than 2 years, or like it can take gold up to more than 2 years to continue this uptrend. Okay, so gold have to return back to this area, because in historical, when it returns back, it's going to push higher. Why? Because the big boss are the one that created this opportunity. So many orders has not been fulfilled there. There are a lot of orders placed here. So those orders are not fulfilled once. Partially they are fulfilled, while the remaining ones are waiting for retracement. So price will come here and pick some order, and you can see the trend line. Okay, so in the higher time frame, we will say that gold is doing what? Is in uptrend market. Okay, in the weekly time frame, you can see these swingings that gold is uptrend because it's making higher high. Gold is making higher highs and higher low. You see, this is a high, this is a low, this is a high, this is a low, higher lows. So this is the move. Go, you know, the next area we are expecting gold, we are expecting a neckline and loop to exist here in the weekly time frame. We are expecting gold because price retraces here and push, creates double top. So gold is coming here, not necessarily to break this area. Why it will not break this area is because this is uptrend, and here becomes a higher low. So gold is coming to this higher low to continue going up. It will range, yes, because to every swing there is opposite swing. So it creates a equal high, so it will create equal low. That equal low will create a new, will just create a move to the upside. Maybe we can take profit somewhere here, can take profit somewhere there. Okay, so if we go to the daily time frame, you notice that gold has been in uptrend with different configurations and patterns. Okay, you know, gold break out of this pattern, it break out of this pattern, okay, and then push higher. This is a pattern. So this is a kind of you can see this is a pennant or falling wedge pattern, and gold, or kind of, if you check it, descending triangle, gold break out of it. Can be any pattern, just know that this is a pattern. Okay, or this is either pennant, descending triangle, or a kind of falling wedge, and gold break out of it, moving up, create another pattern here, break out of it, keep going, and then so gold is failing to take this high. It is failing to take this high, and then because it's failing to take that high, it is ranging, it is distributing. In distribution, one market, the uptrend based on Wyckoff criteria of market, when market is uptrend, it reaches certain level where it is stable. It cannot change direction in one reactions. No, there are secondary test 1, secondary test 2. Okay, so it is going to react to this area, this strong support or last area, the last support level. Okay, last point of support is going to react to this support more than once. It's going to react more than once. So this is the first reaction. So this one that is coming will create a secondary reaction, meaning that gold is going to go up again. But we have to be precise enough to get the right loop and neckline. So if we now go to we need to go quickly to the 4-hour time frame. You can see that gold have not yet, like, first of all, gold need to reach this area before we start making analysis. Okay, but I'm going to show you what gold just did in the past. Okay, because we are just predicting the future. Gold is selling. It's going to break this price by next week, by Monday. Very soon we enter Monday. So gold maybe in the next 4 to 4 hours, or the next 4 to 8 hours, we enter the next trading week, okay, which will be on Monday. Okay, gold is going to break this price of 2325.86 and drop to this area. At least it can drop to this area of 2291. All we need is to position very well. Okay, see now, in order to position for this gold movement, we need a neckline in 1 hour time frame. Okay, so that neckline has happened. So we are following the big boss, which are the sellers right here. So there is a neckline here, and we have a loop. There is a loop here. Okay, there is a loop here. Okay, so this is the loop. Now there are some retests. You see that retest in M30. You will see the retest. Gold keep rejecting. So we shall be selling gold. We shall be selling gold at these prices, and then we can go to 15 minutes time frame and look for where to place our stop loss. Okay, so we can draw this small trend line, and then we can take this swing here. Assume we are entering here, then we put our stop loss here, and then we are going to ride gold. Not here. No, we are going to ride gold back to. We are risking 30 pips, and in the 4-hour time frame, we are going to take gold from that place back to here, and then we are going to get 410 pips. Okay, so what's the risk reward? I'm going to take you to calculator and show you the risk reward. The risk reward is 410 divided by 30. Let's assume if you approximate, because it was around 3 point something, so if you approximate that, it will be 4 points, which when you convert to pips, it will be 40 pips. So we are having risk reward of 1:10, meaning that if you risk $50, you are going to make $500. You know, so that's the power of understanding of the market. Okay, so you know what I'm teaching here is realistic, man. Okay, it's realistic. Okay, so let me show you how this thing has been working in the past. Okay, you know, how would we have predicted this move? How would we have predicted this move from here to here? It's price action networking. Okay, first of all, we have a move here, break of structures there. Always study every single structure, at least in the H4, to understand what market is doing. H4 is necessary. Even if you cannot do the monthly and the weekly and daily, try the H4. You see here, the price came here and push high and do what? What is it doing? It have to come and react to this what level, because this is a structural level. These are resistance and support that have been broken. So price have to come and react and push down, and then that means we expect that push down. Always know what price is going to do next. We don't miss every single structure. We expect that push down, and that is the neckline here. very tiny. Most necklines are not visible in the H4 time frame. In the H4 time frame, you miss opportunity. So, but in the H4 time frame, you can understand the overall direction of the market and big players in the market and the structures. Okay. Then, if you go to the H1 and M30, you can actually see what is happening. So there is a neckline there. Okay. If you go to the H1, you will see that neckline. So there is a neckline. There is a neckline here. Okay. Try to identify this, and then we have a loop. There is a loop where market just struggle and break out. So if you check here, neckline, then the loop,